The Bollinger Bands breakout is one of the most popular entry signals in retail trading. Most traders know the rule: price closes above the upper band, buy, but nobody actually tests how well it works across hundreds of stocks. So we did. We ran the standard implementation on 497 Nasdaq stocks, built an AI loop to evolve the signal over 18 generations, and then measured the result on data it never saw. The seed started at 32% win rate. The champion hit 44.5% on completely unseen 2024 data, with plus 3.58% average return per trade. This is what the evolution found. Here is the strategy we started from. The standard Bollinger Bands breakout. Rule 1, confirmed uptrend. Price must be above the 200-day EMA. Trend filter, no buying into downtrends. Rule 2, the breakout. Price closes above the upper Bollinger Band, which is the 20-day EMA plus 2 standard deviations. Price has broken out of recent volatility range to the upside. Rule 3, risk control. A stop loss set at 2 times the 20-day volatility. Exit when price closes back below the 20-day EMA. Simple, clean, popular. The result across 497 stocks, 32% win rate. Expected return was positive, large winners offset frequent losses. But we believed the signal had more edge hidden inside it, so we ran the AI loop to find it. Here is how the loop ran. Step 1, mutation. Claude Code writes a new version of the entry signal each generation. New filters, new thresholds, new exit rules. Step 2, the evaluator. Every mutation runs on in-sample data only, 2015 to 2020. Validation and holdout are locked. No peeking. Step 3, fitness scoring. 60% weight on out-of-sample expected return. 20% in-sample return. 20% win rate. Step 4, the quality gate. Win rate above 30%. Expected return positive. At least 20 trades. Fail the gate, discarded. Step 5, survivors mutate. Best strategies from each generation spawn the next. 18 generations. And 3 discoveries changed everything. First, removing the stop loss. The stop was cutting winners that pulled back temporarily and kept running. Removing it raised the fitness score 40% in 1 generation. Second, stage 2 filter. Requiring the 50-day moving average to be above the 200. Only entering breakouts in established uptrends. Third, monthly momentum. Requiring 1-month return above 5% before the breakout. Filtering out false breakouts in consolidation. 3 changes. 1 champion. 3 periods. 3 independent measurements. In sample, 2015 to 2020, 49.4% win rate, plus 7.20% average per trade. 2744 trades, including the 2018 correction and COVID. Validation, 2021 to 2023, 45.6% win rate, plus 4.28% average. 2155 trades. The validation period included the 2022 bear market. The strategy was mostly in cash while stocks fell 40%. Holdout, 2024 to present. This is data nobody touched during development. 44.5% win rate, plus 3.58% per trade. 3236 trades. Average winner, plus 14.8%. Average loser, minus 5.4%. Winners are nearly 3 times the size of losers. That asymmetry is what drives a positive expected return at 44% win rate. This is the distribution of holdout trades. 2024 to present, 3236 trades. Look at the loss side. Most losers are clustered in the -5 to -10% range. Average loss, minus 5.4%. The exit rule, close below the 20-day EMA, limits damage. No stop needed. The EMA does the work. Now look at the right side. Winners stretch out to 20, 30, even 40%. Average winner, plus 14.8%. The EMA exit lets winners run until the trend genuinely breaks. That asymmetry, tight losses, large wins, is the structural edge. Subscribe to Backtest Lab. We test a new strategy every week. Here are the top performers in the holdout period, 2024 to present. Dell Technologies, DELL, 37.8% average return. Banco Bilbao Vizcaya Argentaria SA, BBVA, 32.7% average return. SanDisk SNDK, 31.0% average return. Bloom Energy, BE, 30.3% average return. Strategy, MSDR, 28.2% average return. High momentum stocks with confirmed stage 2 uptrends and clean breakouts. The full ranked list of all 497 tickers is on Patreon. Every ticker, every metric, sortable by win rate or average return. Now let's look at one concrete example. Every month, Patreon subscribers get the letter. 1 email. 4 things I look at before buying a position. Technical structure and moving averages. Is the stock in stage 2? Where is it relative to the EMA, social sentiment, what traders on stock twits and Reddit are saying, and whether that crowded positioning is a signal or noise. News and macro, what is actually driving the move right now, not last quarter. And fundamentals, revenue growth margins, and upcoming earnings. The May issue delivered 5 picks. Number 1 returned plus 241% in 3 months. Number 2 plus 213. The full letter, complete with my trading notes on every pick, is at the Patreon link in the description. AMD, Advanced Micro Devices. Here is how the strategy traded it from 2021. October 2021, AMD breaks above the upper Bollinger Band with stage 2 in place and 1-month momentum above 5%. Entry at 116. December, AMD closes below the 20-day EMA. Exit at 144, plus 23.7%. 2022, AMD crashes from 160 to 70. The strategy never entered. Stage 2 was broken. 0 exposure to the entire drawdown. Late 2023, AMD recovers its stage 2 structure. 3 entries across November and December. The January 2024 breakout, entry at 146, exit at 166, plus 13.4%. 12 trades total, 63.6% win rate on AMD alone, strategy up 29%, buy and hold up 343. AMD is an exceptional stock, buy and hold wins here, but the strategy had 0 exposure to the 2022 crash, selective entries, managed risk. $10,000, strategy in green, buy and hold in gold, both starting on AMD in late 2021. 2022, buy and hold falls more than 60% from peak. The strategy is in cash, flat. 2023, both recover. Strategy re-enters when stage 2 and momentum align again. By 2025, strategy up 29%, buy and hold up 343. AMD is one of the best performing stocks of the decade. Buy and hold one here because the eventual gains were massive. The point is not to beat AMD. The point is, across 497 stocks, this discipline generates 3.58% per trade in holdout. On average stocks, not just the winners. We broke all holdout trades down by sector. Finance had the highest win rate, 50.5%. Utilities came second at 47.4%. By average return per trade, telecommunications led at plus 5.59% per signal. The weakest sector was healthcare at 39.0% win rate. The pattern. BB breakouts with stage 2 momentum work best in sectors with institutional trend following behind them, finance, utilities, large-cap technology. They work least well in healthcare and consumer staples, where fundamentals dominate momentum. 3 periods, 3 honest numbers. In sample, 49.4% win rate plus 7.20% per trade. Validation, 45.6% plus 4.28% per trade. Holdout, 44.5% plus 3.58% per trade. The edge held. 2 caveats. First, survivorship bias. Stocks that delisted between 2015 and now are not in this universe. These numbers are slightly optimistic as a result. Second, no commissions, no slippage. Subtract 5 to 10% for real-world execution costs. With those adjustments, the edge is still positive on the right stocks, with stage 2 confirmed when monthly momentum is already accelerating. Subscribe and hit the notification bell. Full ticker results and the complete Python Backtest script are on Patreon, link in the description.